Eric Mwathe for the weekend of November 29th and November 30th, 2014. Let's take a look at the US markets. Friday here, Dow was pretty much unchanged, so was the Nasdaq. S&P 500 was down slightly. Gold was down almost 2%. Crude oil was down 10%, and the VIX was up 10%. So that's how the market did close for the week. And now if we take a look at the net movement for the week, we see that the S&P 500 was unchanged for the entire week. Take a look at the Nasdaq, which was up the most, almost 1.67% for the week. And take a look at the Dow for the week, was almost unchanged at up 0.1%. So let's take a look at how the markets look like on the charts here. We begin by taking a look at the Nasdaq Weekly. And let's take a look at a fresh chart here. And what we see here is a nice 1, 2, 3, 4, 5 weeks above the prior weekly closing high. So that's a very strong breakout. We are now slightly above the previous declining line. So this seems like you can consider this a breakout above what was looking like resistance on the declining top lines. So the market here is free to do whatever it wants. This could be an area akin to here when the market was moving back above 69.1. So we have to be careful if the market continues holding above 69.1, number one. And if it continues holding above this line, you have to be aware that it is very easy for the market to continue moving higher. So that would be the key for me. One of the things I was watching is resistance on this level. Let's draw it a little bit higher. So resistance around there. The last resistance was here, which was one of the reasons why the market pulled back here in September. So if the market does eventually show resistance, let's say we have a down week confirming resistance here, then that is where the market starts pulling back. So on this level, there's still a chance that the market could stall. But what is impressive is the fact that the market has been able to move above the declining line. So anything above that and the RSI holding above that blue line suggests that this market is really and truthfully very strong. Take a look at the Nasdaq Daily. Here the only thing you can see here is a very powerful move above 69.1, and that just means that even with a correction, the market has a chance of continuing moving higher. Even it is above the previous declining top line, so also if the market is above this line, it should continue being strong. Take a look at the Dow. And the Dow continues showing this possibility of resistance at that RSI level. The last time we stalled on this line, it gave us a short-term high and a relatively serious pullback here, even though it was short-lived, but there was a pullback there. And so if the market rolls over like that and shows resistance, then this could still be a period where the market pulls lower. But if the market can hold above that line and the previous declining line, so if the market continues holding above this line here and trades above it, then the bulls are in control. So above that line and above this line, if the market can be above those two lines, then it has a chance of moving higher. Take a look at the Dow Daily. Ever since it moved above 69.1 here, which was somewhere around here, the market has been very strong. So as long as it's holding above 69.1, the market should be safe to the upside, and also as long as it's holding above the previous top line. So this line here connects the previous highs on the daily RSI, connecting these highs here. And as long as the market is holding above that line, so ever since it jumped above that line somewhere there, which is this period, this breakout on a daily, the market has been bullish, excessively bullish or very strong. So it's very easy to see that anything above this line, even with pullbacks, suggests that the market should be okay to hold. So let's say the pullback brings the market back to this line and bounces with a support. It will suggest that the market is going to make another move to all-time highs. Now, one of the problems that I see in the market is short term. On the Dow, hourly using an RSI period of 26, you can see that we've been making incremental new highs on the hourly. So all these are new highs, and yet the RSI continues making lower lows. So this here is a problem on the hourly. You take a look at the 30-minute chart for the Dow. Same type hourly chart, negative divergence. So you're making higher highs in price here. Most recently this higher high on the 30-minute chart, but the market continues making lower lows, and most recently a lower low. And what makes this negative divergence a little bit bearish is the fact that it did not move above 61.8 on the 30-minute when the Dow is making all-time short-term highs. So that could be a problem longer term. Also, you can see this clearly if you take a look at the transportation index hourly chart, and we are using again a period of 26, and you can see that making a higher high in price. So higher highs here, and even short recently here, and yet the RSI continues making lower low, and recently another lower low on the hourly. That could be a problem longer term. Take a look at the S&P 500, and we can see almost unchanged for the week, which would make sense. Why? Because we've been expecting some type of resistance on the previous breakpoint. Previous breakpoint was here, which is this high, and a pullback came after that. So if we draw a straight line, you can see that if the market does confirm this as resistance and rolls over in the new week, then this is going to be where you want to go, or at least look at some short trades, because this resistance was responsible for the most recent pullback in the market. And if the market stays below that, that's bearish. There's also another line connecting the highs. So connecting the highs on the weekly RSI like that, if you draw them connecting the highs, you can see this is a reasonable place to expect some type of resistance on the S&P 500. Also take a look at the daily, and we can see here holding very well above 69.1, holding above the prior daily highs on the RSI. So here we are holding above that. We've come once back to the line, which is here, and held, which was this somewhere here. All to say that as long as the market is holding above this line on the daily, the market should be safe even with a pullback. So a small pullback in price that brings the RSI to this line and a bounce would indicate that that's where you want to go and continue buying long positions. But if the market does eventually break below that line, then maybe now that we're in a different phase. Take a look at the hourly, and you can see hourly here on the S&P 500, higher highs in price on an hour-to-hour basis, higher highs, but the RSI continues making lower lows. And recently we saw another spike to new highs on an hour-to-hour basis. RSI did not follow through. The one thing I did want to add here is keep an eye on the MACDs moving below zero. One of them is below zero, and if the other one moves below zero, then that's going to be confirmation that now the market is beginning the week with a pullback. Take a look at the Canadian market. Canadian market did have a down week, sizable down week, down 2.5%. One of the reasons why it had a relatively big down week is because the weekly RSI moved back below 50. The prior week was a big up week because the RSI had moved above 50, and now we see the opposite, which is a big down week as the RSI is moving below 50. So what I'm trying to say here is be on the lookout. If this thing jumps above 50 in the coming week, or whenever it does, expect a big, or at least a nice reversal to the upside. We go back to our analysis last weekend. We had talked about the possibility of resistance when the market was trading here. Why? Because we drew a line connecting the highs, and the market had come back there. We also drew another line from the previous breakpoint, and that breakpoint here on the RSI had been responsible for the highs there and this big drop. So once the market came back there, we were expecting some type of resistance, and also we had a back test line which I drew like this, connecting the lows here through here, something like that. And so these lows made sense because they connected to all these short-term lows. So this line was well established. And so once we moved below this line, we got a sell signal, which was this move here, and the market has come back. All I'm saying is, as of last weekend, all these three lines were corresponding to where it closed for the week, and so it makes sense that we are seeing a pullback here as far as that market is concerned. And I guess the conclusion here is that this market is probably in a different phase, but it's come back to the 10-week, to the 50-day moving average, and also to the 200-day moving average. The only problem this time, we have a bearish cross between the 50 and the 200 days. So probably, if you are going to take anything out of this, is probably it suggests that over time this is probably looking to work its way lower because of this crossover, which is bearish. Now, over the last couple of weekends, we've been taking a look at the SVXY, which moves in step with the market and is inverse the VIX. Just want to show you a simple observation. Over the last couple of years, when the market has been good, stock has been bouncing right here on this 50 band. So around the 50 is where it's been bouncing. Now I'm starting to suspect that this is now going to be a different phase in this market, because this could very easily become resistance, and for the first time it's going to be trading below that previous area above 50. So above 50, stock was doing well, but I'm starting to suspect that over time this is now going to be inverse. What I'm trying to say is that over the last couple of years, we've been bouncing off the 50, as you can see, bounced off the 50. Nice time to go long the market every time. Uniform activity at 50, nice time to go long the market, and it has been the case for a number of years, even recently bouncing here. Now I wonder whether we are going to get a reversal back below 50, which is going to suggest that now we're in a different phase. As you can see, if it finds resistance on the 50 here, that's going to be the first time in a long time. It hasn't done any type of resistance on the 50 and point down since it started trading. So if we go to the daily, there's some added evidence of resistance. In fact, if you go back to this short-term high in the stock and a shallow pullback here, we can see the RSI broke down right there. So this break on the RSI, draw a straight line like that, and you can see that once we came back and found resistance here, so once this was a sell signal, it gave us the high. We've come back and hit that with uniform activity, suggesting that more than likely, if this continues being the case with a move lower, then this is telling us the VIX is back in play for short term, and the general market should be due for a pullback. So I would be looking for a pullback based on this chart, because it's telling me that more than likely we get a pullback here and a slight pullback in the market, maybe even major highs. We shall see. Let's take a look at Apple, and we can see here for the month of November was up almost 11%. Why? Because the RSI continues holding above 69.1. And also, if you take a look at the weekly, continues holding above 69.1, and it's had 1, 2, 3, 4, 5, 6 straight weeks, because the RSI is holding above this threshold of 69.1. I have videos on YouTube explaining this, so if you're new to this type of reasoning, anything above 69.1 is always a sign of superiority. And the daily also continues holding above 69.1. It's done so since gets the entire month of November, which is coinciding with this move from this breakout in price. So from here to here, the daily RSI has been above 69.1, which is the reason why the stock has been on fire. The weeklies, the dailies, the monthlies above 69.1. That's very powerful. Could be the reason why even last week we thought that there was a reason for a pullback, because we had a slight negative divergence on the hourly, but the market took that out at the beginning of the week with a breakout there. So even short-term resistances are being broken because of that powerful daily, weekly, and monthly chart formation. So let's go take a look here and conclude with the monthly charts. Take a look at the Nasdaq monthly chart. And you can see here on the monthly, it's been above 69.10 since middle of last year, which is during this breakout here. And since then, the market has refused to go down as the RSI continues defending 69.1. As long as it's holding above 69.1, it is going to be very difficult to see this market going down. So anything above that threshold of 69.1 is absolutely keeping this market healthy. Take a look at the Dow. And the Dow, again, breaking out recently above this recent monthly closing out or the prior monthly closing high at about 17,000. It's above that. Monthly RSI continues holding above that. So as long as the monthly RSIs are above 69.1, the Dow should also do well, and so should the S&P 500. If it holds above and continues holding above 69.1, something it's done since, let's call it March of 2013, this market has been on fire. So it's just been on fire since this time period here. When it moved above 69.1, you can see very nice move. So the key is the monthly. If it holds above that level, expect even higher prices. If you want to watch part 2, log on. Otherwise, have a great weekend. Eric Mwade, good luck, peace, and blessings. Woo!